Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having a phenomenal day. Obviously, we're going to take a look at Bitcoin in this pullback. CME gaps have been filled, so this is a very good sign here for Bitcoin. Obviously, a bit more on the excessive side. As per usual, the price doesn't just generally bounce off that level, but what we want to look at here today, I think is more important, is basically the larger weekly and or monthly timeframes here for the ETF net inflow or outflows, some common trends that we're starting to see there, as well as, of course, the fear and greed index and how that affects crypto market cap, specifically altcoin market cap. And obviously some back-end liquidation data too, some things to kind of round out the analysis here. So be sure to stick around. It's a pretty big one today. Let's take a look. All right, folks, before jumping in the back-end data, just quickly want to remind you to hit the like button, enable alerts if you can. Obviously, make sure that you stay abreast on these analysis. I deeply appreciate you hitting the like button. Do that a little bit more frequently if you can, just so we can get the views kicking up here. Unfortunately, things are a bit low right now, but I think generally interest right now is low, so I'm not super surprised by it. Most people are just kind of shooken out, so to speak, ever since that crazy crash we had last month. So speaking of crash, let's kind of take a look here at the ETF net inflow and outflows. And what I want to kind of do is just kind of give you perspective on the monthly timeframes and give you just kind of some ideas of where the price might go next based on previous trends. Now, trends aren't always 100%. They're not going to be like the end all be all, but for the most part, we start to see correlations between ETF net inflows and outflows and significant red candles on the charts, right? So it does influence that, or essentially works in your favor if you're able to kind of figure it out. So what I want to get at here is when we look at the previous, we got the Trump inauguration, everything leading up to that, we saw 4 solid green months. We went from 70 to 110K, right? Somewhere in that range. Things were looking awesome for Bitcoin. And then obviously when Trump took office, we took a pretty significant hit because he shook things up here for about 2 months straight. And then obviously once things kind of calibrated, we started to see all-time highs there of 116 to 125, and things were looking awesome. We saw a pretty significant pullback in August, and then of course this month so far starting red as well. So the reason why I bring this to your attention is because you look at the charts and you kind of just compare that with Bitcoin on the monthly, you can see a pretty obvious correlation here. In other words, we saw the 2 months here that Trump took office, that was pretty much terrible, right? Shook things up a lot. Things rallied back once things kind of stabilized. Now we've kind of been in this kind of hit or miss area here. But generally speaking, when you look at the red months, every red month here is correlated with ETF net outflows. All right. So it doesn't mean we're going to see a red month here because it's showing red for the moment. We still got 18, 19 days left. But the truth is we're not off to a good start, but we're also hitting our local bottom. I'll explain more so about that and why that's relevant too. But ETF net outflow for the month so far is red, obviously, and the last 2 weeks in a row have been red. One more thing too, just to touch on before we move on. When generally speaking, with the occasion of some really strong outliers, which is when Trump took office, more of a fundamentally fueled event there, we don't see more than 1 or 2 weeks in a row of ETF net outflow. At least this is only the data based on since ETF's been approved, roughly first of the year in 2024. So to give you some perspective, it's rare, albeit it can happen, to see more than 2 weeks worth of red, basically implying that we're due to capitulate here and potentially bounce and continue higher, right? It's that descending trend line break, that continuation potential there. Furthermore, too, we're also seeing fear and greed index hit one of its lower states here that we can see, right? Obviously, we zoom back here. Things were at a terrible place when Trump took office, right? 1 month after. Once more, there was a lot going on in the world at that point. There's a lot going on right now too, of course, but generally speaking, as fear continues to subside, we start to see it will inevitably increase and the price goes with it, right? So it's just something to be mindful of. We can also see too in the last few days here, we've seen a pretty significant amount of altcoin volume, implying that the bottoms are in a lot of ways here. I'm not saying the exact bottoms in, we just go FOMO right now, but the truth is, I think averaging into your positions is a pretty decent consideration for a spot bag perspective because you have more sustainability with altcoin market cap hitting that 1.5 trillion support level. At least I feel it's a support. In general, that's usually an area in which we start to see things kind of bounce or pivot. Obviously, we want to see Bitcoin dominance pull back, but that's a different story altogether. Now, when we look here at crypto, basically the back-end data here, we can see from an order flow perspective, 103.8 and 103.1 are pretty heavy concentrations. So basically just kind of telling us we got a fairly tight range in the 103 to 104K area. And that just kind of tells us that we're compressing and starting to maybe figure out a good range. Generally speaking, you start to see those order blocks start to get closer when the price starts to find its bottom. Once more, it's not a guarantee, of course, but generally speaking, that's kind of the concept. To touch on this here too, Bitcoin CME futures has officially filled, and this one too as well. Actually, just before the recording, I sent out an update letting you know that ETH futures were almost filled, and they are now. So all CME gaps from the weekend are fully filled. Taking a look here quickly at Bitcoin dominance, on the top left-hand corner, we can see we are essentially still in a range, but tapering off in the last 4 hours, and money's flowing into stable coins. Altcoins are not pulling back. This is a good sign. Generally speaking, you see altcoins go down when stablecoin dominance goes up. This kind of tells us that people are putting some money into basically pulling money from Bitcoin and putting them into stable coins, or sorry, putting them into altcoins. And there's also money going into stable coins too. But for the most part, with altcoin dominance not dropping hard and Bitcoin dominance pulling back, that's generally a favorable sign. Not so good for Ethereum, of course, but that's a different story altogether. When we take a look here at Bitcoin liquidation, let's quickly just double check here last 24 hours. Once more, there's that tighter range there. We could see a wick up or down here shortly. Obviously, that may change by the time you see this. So let's go ahead and take a look at the macro and kind of understand there's a lot more longs to be liquidated than the shorts right now, okay, at least within the last 7 days. So market makers see this. They know that any late longs that got in yesterday or sometime in that period, FOMOing in, as I recommended you don't do that. Wait for the pullback. We talked about that in our community. The price action, we're starting to see just longs start to pile up, right? So the more propensity for the price to pull back in the short term because of that. Now, 30-day time frame, there's still more to the upside. So I still am, for lack of better terms, bullish on the shorter term time frame. In other words, like for the next week's worth of trading, even though I think we're still due to pull back shorthand here in the next couple of days, perhaps. I do think overall we're going to go higher because there's more macro liquidation for the moment. Okay, that could definitely change, but for the most part, that's something to pay attention to. Liquidation for Bitcoin is basically a 2-to-1 ratio here for longs versus shorts. Same thing with Ethereum. What Solana looks like to be Solana's getting hit pretty hard here. That's why I did recommend either shorting at 175, which I don't think we quite hit that, or waiting for a long in the 150s. So just to quickly give you some perspective here, the areas I'm considering trading is shorts. These ships have sailed, I'm pretty sure. But for longs, we're looking at Bitcoin between 104 and 103K. We're in that desirable range for the moment. Obviously going to wait a moment to see how things work out first. But ETH 3450 to 3375, SUI 205 to 198, Solana 158 to 163. So those are kind of the target ranges I'm looking for on a long. Just note that these are not trade signals, folks. Some people just jump right into those levels and think it's just going to magically bounce because of it. You got to reevaluate Bitcoin before you get in, okay? That's what we're doing now, our due diligence, okay? So let's go ahead and zoom on in, see what's going on with Bitcoin, and just kind of go from there. So starting with the backend data, we want to recognize here that, and this is just the macro structure. I looked at the 7-day yesterday, so I figured taking a look at the 30-day here today makes more sense. We can see some open interest building at 103, basically 104. We can also see lower ranges. We've talked about this previously, 99 to 101. Those are kind of those previous areas of open interest. So heaven forbid we lose 103, then there's a distinct probability that the 99 to 101K range could be there on the docket. Now, we take a quick refresh here, we can see liquidations tapering off for longs. Basically, there's 3 billion left in longs versus 7 billion about 12 hours ago. Looking at the larger timeframes here, though, once more, there's just a ton of liquidation below 99,000, and then the same thing as well above 116. More specifically, locally 111 is that local resistance for us, so we want to treat that as the initial starting point. So if we do end up continuing to rally here moving forward, I do think 111 would be the initial top, right? So you can still be short-term bullish and macro bearish, etc. Like the whole concept of me saying that, though, is that I don't want you to attach yourself to a mindset that we're stuck in either direction, okay? Because the truth is we're in a transition right now, and when you're transitioning, you don't really want to be stuck on just being hammering longs, for example, only hitting longs. You want to be open in both directions because the market consistently changes. And for right now, while we did break above that local high of 104K, we're not bullishly backtesting it very well right now, okay? However, we are creating a fair value gap here, which is good. It could imply a bit of a run up to about 105K as a rough estimate, but there's still previous fair value gaps too, right? And we have the most amount of volume at roughly 102,000. So 102 seems much more desirable than 103K right now. Based on that simple sentiment that we could fill those fair value gaps, we'd be getting in at that point of control. And, hypothetically, we'd still be losing our support, but we don't know if that support's going to hold just yet because the daily candlestick hasn't closed. Okay, so look on the daily time frame. We are under 50 on the RSI, money flow index below that. We've known this for a while. The macro structure is still bearish. While we are trying to converge, it hasn't happened yet. So the truth is we don't want to be attaching ourselves to the mindset that we're just going to go straight up. Okay, some people are thinking 150K between now and December. That's potential, right? But that's based on the premise that, November and December are typically good months. Now, while we looked at that previously and recognized that 65% of the time we're going to see that happen with the price action continue higher in those months, we've seen some pretty bad Novembers too and Decembers, right? It really just depends on the overall market. And right now, the things going on in the world and just kind of being at this all-time high territory, it doesn't lead me to believe that we're just going to go shoot straight up because people want to buy in November, December. Anyways, just some food for thought there. But all that being said, 4-hour time frame is so far diverging. We lost 50 on the RSI. MACD is diverging. Stochastic as well. Money flow index is remaining high. That's really the only saving grace for us here. So me personally, I think it's worth waiting for an entry that may not happen in the 102 to 103, maybe 102.5, 103 possibly. It's hard to want to warrant a long position at 103 just because it's really close, right? We could very well go a lot lower. So with this momentous kind of push here, the significant sell-off, it's leading me to believe that we're going to go just a little bit lower before we pull back or we continue higher here. I would be looking for a bullish backtest this 102K range for this descending trend line, and then maybe an overextension on the 4-hour. Basically seeing the RSI hit that 30 level, that would be a cause for considering a long. Between now and then, probably best to sit on your hands and wait. That's generally the best strategy for situations like this. So, I know it's a bummer too, right? You just watched me for like 10 minutes straight to tell you not to take a trade. But I'll tell you what, folks, the best traders are going to be the ones to recognize it's not a good time to trade, okay? So don't force a trade. It's okay. Sit on the sidelines. If you want to take some trades, of course, low leverage, low position size, and, do the responsible thing. Either way, at this point right now, the responsible thing is to not take a long just yet. I think we want to see how this current range holds first before we do that. Those are my thoughts. What are yours? Let me know. Let's take a look at small coins next. If you're looking for a new exchange or possibly just want to help support the channel, Bitunix has got you covered. We've been partnered with this exchange for over 2 years. It's been our fan favorite for our community, and the reason why is because they take really good care of you. They offer trading reward bonuses as well as a reduction in fees. Best exchange I would recommend at this point. Link down below for more information. All right, folks, take a quick look here at Ethereum, see what's going on. We're going to start with a quick comparative analysis here, just kind of see if there's any strength to this here. Now, when we look at the charts, Ethereum is performing better than Bitcoin. Just kind of from a bird's eye view, we can see this local high here. Currently being tested as a new low. So 3460, 3450 is that rough estimate for support, where Bitcoin has already kind of lost its support at 104K. So that does imply Ethereum maybe have more of a propensity to bounce or continue higher off this range. So taking a look here, we can see from an open interest perspective, 3450s and 3400 are the two closest areas of potential support. When we look at liquidation delta, it's getting very close to break even here. And generally speaking, that's not a good sign that shows that we're seeing this shift in momentum and that the bulls are kind of getting shooken out. Generally, that can be okay because we will see the price pivot a lot of times because of it, but it's still not a great sign nonetheless. So if you do end up taking a long, make sure you're very, very careful here and watching it close, because we could see even 3400 from a liquidation standpoint there as the next potential area of consideration. This is the range that I'm looking to buy into, that 3370 to 3450. So we'll see how that holds here, but hypothetically, we may see 3400 from a liquidation circumstance there based on the last 7 days of liquidation. So, market makers are pretty good about being like, oh, oopsie daisy, we're going bearish. No, we're not. And then everyone trapped into late shorts gets hammered. So be very cautious trying to take a late short here. At this point, there's a lot of support in the current range. Furthermore, open interest, 3400 is that heavy amount of support for this coin as well. So Ethereum is looking decent in its current range. When we look here, of course, though, we are seeing RSI tapering off here, money flow index getting low. Generally, when you see 30 on the RSI and 20 on the money flow index, you will see the price action end up kind of pivoting or bouncing. It's usually a sweet spot that I like to consider jumping into. So hypothetically, along on this coin here in the relative near future may be advantageous. It just requires Bitcoin to stop pulling back. Okay. In Bitcoin, we were kind of addressed. We're getting closer to that lower support range, but it's hard to tell just yet. Daily time frame on Ethereum is still fairly bearish. We haven't broken bullish by any stretch. We're maintaining above the 200-day SMA, which is great, but losing that $3,400 range would be potentially problematic for us. But all in all, nothing super crazy outrageous here for Ethereum. Those are my thoughts. What are yours? All right, let's take a quick look here next at Solana. Let's start with the quick comparison on the right-hand side and kind of see there's nothing super amazing here. This is a pretty similar chart here to Bitcoin. So I don't really see anything amazing. So, it's all good in that regard. Or basically, sorry to clarify, it's not all good. Solana is moving synonymous with Bitcoin. That's what it basically means. A lot of coins will align themselves with Bitcoin on pullbacks or continuations higher. And the coins you want to trade are the ones that are generally not performing the same. And what I mean by that is just, unless Bitcoin is going to bounce, Solana, it will just continue to follow suit with Bitcoin. Take a look at the back end though here for Solana. There is open interest support at 158. We've identified that previously. Secondary to that 155. So once more, that's kind of that desirable range for me in the low 150s to low to mid 150s essentially. Now, all that said, looking at liquidation delta, we can see we've shifted bearish. Generally not a great sign to take along, but all liquidation as per usual has been pretty much swept. I mean, there's still a little bit left down below the low margins here, but 158 would be the local bottom. Okay, so hypothetically 158 is still kind of a consistent number here for Solana as a potential area of support. Okay, we can see that reflected here with this white line. We look at the daily time frame. Just to quickly understand here, we have a lot of resistance above us. So once more, if we do end up breaking out, 175 is that local top that we should expect to have some resistance there if the price continues higher, right? So we should be able to see something like this here. It's an exaggeration, of course, but 175 will be our resistance here because it was a strong support previously. Now, SUI, if we take a look at SUI next, it does have a slight difference here, a little bit of a shift, if you will. In other words, we're maintaining above the 50-day SMA, below the 20. We've broken our macro descending trend only for the moment, of course. It's a little too early to tell. And we're maintaining pretty well here. Honestly, this coin does have more favorable signs, right? So that's why I was kind of interested in the low $2 range for a long. I think I said 198 to 203. We're not quite there yet, but we did see a candle wick down there roughly 12 hours ago, sometime overnight. As per usual, you're seeing these amazing candle wicks during Asian market hours. All that said, though, we can see MACD is still diverging. Stochastics still not swinging up there. So there's nothing really phenomenal here from a bird's eye view, but when we take a look at the comparative analysis, once more, we're maintaining pretty well above this 205 level. So 205 does appear to be a solid support range for SUI for the moment. And it is performing generally better than Bitcoin, even though it is pulling back. It's not pulling back quite as hard if you exclude this candle wick here, okay? So that's kind of a nice sign there. Now take a look here at the back-end data too. Once more, just kind of reiterating 205, 203, 195. There's some pretty solid areas here of support. Just some places to be mindful of, but if you look at this here, outside of other coins we looked at so far, liquidation delta is still bullish. So generally a good sign here for us here, letting us know that we could see a continuation higher. From a liquidation standpoint, outside of the 198 range, there's not a ton. Obviously, there's a lot down way as low as 160. I think the odds of saying 160 is extremely low. But generally speaking here at this point, from liquidation standpoint, in the last 7 days, there's not a lot like really, really close by. If we look at the last 3 days, of course, we can probably see a different scenario there altogether. There's a lot of liquidation still between now and 195. So keep in mind, these are smaller positions. That's why it doesn't show up on the 7-day time frame. But overall, there's a pretty significant resistance wall between 225 and 230. So the important levels we pay attention to on this coin, I'd say 198 to 203 is that solid support range, maybe even 205. And then, of course, that resistance at 220 upwards of 245. Okay, those are some solid areas for SUI. If you're looking for a new exchange or possibly just want to help support the channel, Bitunix has got you covered. We've been partnered with this exchange for over 2 years. It's been our fan favorite for our community, and the reason why is because they take really good care of you. They offer trading reward bonuses as well as a reduction in fees. Best exchange I would recommend at this point. Link down below for more information. Taking a look here at XRP. This coin, once again, still remaining quite bullish. Not to say it can't still pull back. It probably will because we have a fair value gap below the price, and we still have yet to test our local high here as a new low, right? Doesn't always happen, folks, but it's generally best to wait for that to occur, especially when a downtrend. But 235 is that local support for us here. Look on the back-end data here, just to quickly understand where we're at. We can see 235 there, also consistent with open interest. It's pretty much the biggest area that we can see here locally, outside of course, 255 above. Now, when we look at liquidation, it's pretty close to break even, but it's still slightly bullish at about 50 to 100 million. It's not a lot. And when we take a look at liquidation, there's still some liquidation down as low as about 240. So I'd say 235 to 240 is probably a better case scenario for XRP. If I recall correctly, that might be really close to our. I was looking for a short XRP. I would say, and I'll probably just send an update out. 235 to 240 is a good range for XRP entry for a long. Now take a look at the daily time frame. We are still in a macro descending trend, so please don't buy into all those other idiots online telling you XRP is going to the moon. Obviously, that could happen from a fundamental standpoint. Something gets approved that everyone feels is amazing. But the truth is here, from a technical standpoint, yes, we broke our short-term descending trend line. We're still mostly bullish, but that bullish has an asterisk next to it, right? Because we haven't broke our macro descending trend line. We still need to be over 275 to have any legs to stand on here for this coin. So while I think that I'm considering a long in the 235 to 240 range, and if I were to take that, I'm going to take profit before that resistance wall of 270, 275. I'm not going to be stubborn and take a long from to $4 or $5. It's just dumb. You can't do that in the market anymore, folks. We're just not in that kind of trend. That trend can change, but for right now, the situation is kind of stuck on stupid in a lot of ways until Bitcoin pulls its head from its ass. Altcoins, for the most part, are going to be behaving within ranges, and that's just kind of something we got to be okay with, because that's just how trading is. The dynamic always changes. You got to change with it. Try not to be stubbornly bullish or bearish. You got to adjust with the times. All right, those are all my thoughts here. What are yours? Why don't you comment below? Don't forget to join us over at Bitunix too, folks. I always forget to talk about this, but awesome exchange link down below. If you use my link to register, you'll always be eligible for future trading competitions and bonuses, and these are always pretty easy things to qualify for. So awesome stuff. Check them out. They've been great to us for the last 2 years. So thanks again, Bitunix, and thank you for being a phenomenal part of my life. We'll see you again tomorrow. Take care.